Aren't we lucky to have them all? We'll have Amir moderating the discussions. For now, I'll just be here to introduce each of them. And I thought it would be good. This is a tradition, so that they have a few minutes to introduce their company, update us. So we'll go through that before we go into the whole discussion. Maybe a few words first about Jérôme Pelletier. Bonjour. Jérôme, who comes from New Brunswick to Montreal today. He's the Vice President of Sawmills Division, yes, at J.D. Irving Limited. And I mean, you three have such a wonderful career. The bios are all on the website, okay? We thought we would focus more on the presentation today. So I won't say much more, but maybe one thing. How did you start your company in the industry, Jérôme?
I started on piling lumber on the green chain in a small mill in central New Brunswick 26 years ago. So it really started from the first part of the process of producing lumber.
Awesome. Have you participated to many conventions of the Montreal Wood?
Yeah, I've been here, coming here for the last decade or so, and always great to see our fellows industry leaders. What I find unique about this convention is you bring lumber traders, lumber buyers, producers, and also equipment manufacturers all under one roof. So it's a great place for us to connect with old friends and you know, build relationships. And
should I mention that you're actively involved with the Maritime Lumber Bureau too for many years. Thank you, Jérôme. A few words about J.D. Irving before we move to the next panelist. Would you like to introduce your company a little bit?
You want me to go through the slides right now?
Yeah, what would you do? Yeah, we're ready for that.
Yeah, sure. So if you go to the next slide, J.D. Irving Limited is a company, as Karina mentioned, we're located in New Brunswick. That's where our head office is located. Company was founded in 1882. We're privately owned still as of today, and we have business lines in food and agriculture, under the Cavendish brand, where we process potatoes and French fries and other food products. We also have a construction and equipment division, mainly operating in Atlantic Canada with industrial cranes. We also have a wallboard facility in St. John, New Brunswick, as part of that business line. We have consumer products operations in both Canada and U.S. Canada, we sell under the Royal brand, and in the U.S. it's Scotties. We're in the retail and distribution business under the Ken Building Supplies and Atlas Truss brand name in New Brunswick, and Nova Scotia, and the rest of the Maritimes. We operate a shipyard in Halifax, Nova Scotia, where we're building the next generation of icebreakers for the Canadian Coast Guards, and soon to start building the next fleet of combat ships for the Canadian Navy. We also have transportation logistics operations in both Canada and U.S., and, of course, we have our forest product division, which is why we're here today.
Super. You have a next slide, too?
Yeah, just a map of our operation here. You can see on the left-hand side the location of our operations in Canada and in U.S. And in the yellow circle, it's a zoom of our operations in Atlantic Canada, in Maine, where we have 7 sawmills, 7 spruce mills in operations, SPF mills, 2 eastern white pine mill, 1 hardwood mill. So if you look at the right-hand side of the slide, you can see here we own 3.2 million acres of freehold, both in Canada and the U.S. We currently produce 200,000 tons of paper, 335,000 tons of pulp, 369,000 tons of tissue. Our current production of lumber is 1.3 billion board feet. And we're also in the container business, where we produce 180,000 tons of corrugated medium. I think you can go to the next one. Yeah.
All right, thank you so much. Thank you for the presentation and being here with us. Let me introduce you to Ken Shields. Bonjour, Ken. How are you today? Oh, it's already on.
Oh,
yeah.
Yes.
How are you today?
Good morning, everyone.
So Ken is the Chairman, President, and Chief Executive Officer of Conifex Timber. You serve also as a member of the Board of Directors of the Forest Products Association of Canada. You've been in the industry for over 30 years, I think.
Well, interestingly, I started out in the forest sector in Mackenzie, BC at the age of 14. And then I spent about 35 years in the financial services business, and ended up coming back and starting up our company, Conifex. And so I've gone full circle. My wife claims I never did get the sawdust out of my hair, so here I am back at it.
That's a beautiful story. And you flew from Vancouver to be with us today?
That's correct.
Awesome. It's not your first convention then?
No, this is my third or fourth.
Okay, all right. Thank you so much. You have a few slides for us to introduce the young company?
We do.
Okay.
And I'm sure
The
they'll
second
be
presentation.
brought up momentarily.
Yeah. I'll look at the team. Do we have the presentation? No? Okay. Should I switch to the next? Je vais aux prochaines présentations.
Okay. Well,
Ou si on n'a pas le PowerPoint, on va le faire live, peut-être comme ça. If we don't have the slides,
well,
maybe
I'll
you
just have
want
a brief,
Yes,
brief chat.
go ahead.
I don't know what happened to the two slides I prepared, but Conifex Timber is a public company listed on the Toronto Stock Exchange. We operate a sawmill, two-line sawmill in Mackenzie, BC, producing a little over 200 million board feet per year. The majority of our investment in fixed assets is in a 36-megawatt power plant that consumes sawmill and harvest waste and generates roughly over $1 million a month of EBITDA for us. And out of the $1 million a month, about half of it is consumed by debt service, so it leaves the balance to lower our average cost. So we think we have a more competitive business than is set out in the FEA numbers and Hamir's slides. So what I just said should have been on the first slide. So if we could go to the next slide, please.
It's coming. Yeah.
Okay. And so that just summarized, we've already covered that. And the final slide is one that I just wanted to go through some points of differentiation. We believe that we have an extremely robust and high-quality fiber basket. The Mackenzie timber supply area, which is our catchment area, is the size of Vermont, New Hampshire, and New Jersey combined. It has a harvest level of 2.4 million cubic meters. We are the only consumer of saw logs in that entire TSA. We consume about 800,000 cubic meters. So you can see that our degree of timber self-sufficiency is quite remarkable, and in fact, I'm not aware of another catchment region for saw logs in Canada that has similar statistics. I've already touched on the fact that our bioenergy business is an important contributor to carbon mitigation and the economic sustainability of our site. And in common with so many other public companies, our stock price is very depressed, trading at less than 20% of our book value per share and at probably 20% of what potential refundable duties are. So that's the quick story on Conifex Timber. Thank you for your attention.
Thanks to you. And our third panelist, Luc Thériault. Monsieur Thériault, bonjour.
Bonjour.
You work at Domtar, and since August last year, you have been appointed as the president of the Wood Products Business Unit. You also sit on the board of directors of the Forest Products Association of Canada. And since now we know that Ken started his career in the industry at 14 years old, 16 or 18 years old for Jérôme. What about you?
Well, it started at 24.
At 24.
That's been 30 years still, but I started at 24.
Oh, I didn't want to reveal that. But thank you. It's a pleasure to have you with us today. A few words about Domtar?
Yeah, first of all, Domtar, just want to, we went through the rebranding. This is the merger of three companies. I'm sure you guys are familiar with Resolute Forest Product that's been here the last convention, but now Paper Excellence, Domtar, and Resolute Forest Product joined forces, and now be Domtar. Pretty big company, private. If we go to the next one, next slide. We're talking about 9.1 million metric ton of pulp and paper packaging and tissue as a company, 60 facilities, about 30 in Canada, 30 in the US, 14,000 employees, $7.1 billion in sales, 100% regeneration of woodlands we manage. We have customer in 60 countries, and we have about 3 billion board feet of lumber per year that we produce. Our products, you can see that we have a pretty big, wide range. We do pulp, paper, packaging, tissue, wood products, and more specifically lumber, engineering wood products, and wood pellets. And if we look at more specifically here today about the wood product business unit, we're talking about 2,300 employees and 3 billion capacity. And you'll see on the next slide rapidly that this is really where we are. Really in Quebec and Ontario, we have a pretty wide footprint, and we have a couple of facilities in the U.S. And do obviously a lot of SPF, a little bit of SYP, and a lot of some engineering wood as well.
Super, merci beaucoup. Merci à tous les trois d'être là. The next part of the presentation will be in English, of course, but I thought I would bring a little bit of French since we're in Montreal. Amir, I now turn to you for the discussion.
Appreciate it. Thanks, Karina. I thought, gentlemen, perhaps we could start with talking about tariffs and market impacts. And Luc, first question for you. The U.S. Lumber Coalition and the current administration seem to say that there's no need for Canadian lumber in the United States. Yeah. What do you think, and can the U.S. industry actually supply themselves?
Yeah, I mean, there's no question. I mean, the U.S. industry, the American U.S. industry is robust. It's been growing. I mean, we've seen the industry growing, and I think, but I don't think having no Canadian wood is viable. I think it would lead to definitely a price increase, shortage of wood, and it would not be sustainable. I mean, the industry has been expanding, and you mentioned it. There's a lot of sawmill that moved from BC to the south. We've seen a lot of growth, but to the point where, I mean, it's not where it could be self-sufficient. Definitely, we see Canada as being exporting 25% or being an exporter. I mean, they bring 30% of their wood, and about 25% from Canada, 5% from Europe. SPF is a breed of wood that's superior. I mean, I think people like the strength. They like that kind of wood. So I think U.S. customer desire that wood. So I don't think we can go away with that. You talk about expanding in the U.S. We've seen a little bit of a slowdown in the expansion project. And I also think that recently we've seen a lot of movement. We see Secretary Rowland that's talk about, freeing up some more wood. But I can tell you from us in Canada, where in Quebec and Ontario, where we manage the forest, we go in the forest and we harvest wood. I mean, it's not because you have trees that you have an industry. You need the loggers, you need the carriers, you need to build the roads, you need to do all sorts of things. So even though there's some trees available, I don't think you can basically, in the lack of a few years and a year, to build an industry and do that. So you would have to build into the sawmills, you would have to build all the infrastructure, you need to have like paper mills to have the chips, the sawdust, and all those things. So I don't think like short term, mid-term, this is something that's possible. On the longer term, maybe they could grow the industry, but I think the two industries the two countries are so intertwined that I think it's not viable. I think it's fine to say, but it's not as simple as doing that.
Fair enough. I mean, yeah, I tend to agree with that. Ken, I wanted to ask you about, obviously coming from a BC perspective, but are there any regulatory changes that you think either the federal government or the BC government could do to improve the long-term viability of the sawmill sector in Canada, but just, obviously taking into account existing trade disputes, perhaps limit the flexibility?
Okay, well, I can tell you on the chart that you had of all the mill closures in BC, I think 9 of the mills were within half an hour drive or half a day's drive of our mill. So we've seen a lot of people go out of business in our vicinity. And it's a product of, in my opinion, too many regulatory changes occurring in BC, whether it was due to environmental considerations, new harvest type plans, shared decision making with First Nations organizations. And so, you know, we spent some time at the Council of Forest Industries convention. The Premier and Forest Minister made a point that they wanted to get the harvest level in BC up from 30 million cubic meters province-wide, halfway up to 45 million, and that's against an allowable annual cut in the province of 60 million. And, you know, in the current state of the lumber market, I think the lumber industry in BC is probably better off if they don't boost the harvest level, because it would lead to an oversupply situation, and I think it would be a greater likelihood that in my opinion, the too low price projections that you have forecast for 25 and 26 will have a greater chance of being reached. In terms of how Conifex sees the tariffs, simply put, you know, the benchmark Western SPF price was $480 or $490 in Q1. We think that efficient interior BC sawmillers will make roughly $80 or $90 per thousand board feet of EBITDA in Q1. So they've another way of saying that cash costs with a 14.4% duty, all-in cash costs are around $400 per thousand. We think the tariff going from 14.4 to 34.5 or something like that will add $60 US per thousand to our cash costs. And we think that there will be price relief that will at least compensate us for $30 of the $60 increase. We think that we will still have meaningfully positive EBITDA margins in the second half of 2025. And we think that the supply-demand balance in SPF from a producer's point of view is materially more favorable than it is for the southern yellow pine industries. So that's how we see the future.
Okay. Well, thanks, kind of interesting perspective from BC. Jérôme and Luc, is there anything you could say about your own jurisdictions, that evolution or things you would like to see come out of the provincial governments?
I mean, for Quebec especially, I mean, what we need is a very full encompassing strategy with development, and really it goes around having allowable cuts or having volumes that we can rely on and we can project. It's really tough to invest when you don't know exactly what you're going to have in front of you. So there's several key pillars around that strategy, but the first one is that having the volumes, everything we can do about growing the market, inciting people to use wood, fire protection, all those things need to be in place. There's biodiversity and working with First Nation, all of that need to be part of that strategy. And right now the governor of Quebec is working on revising the forestry regime, and we think that all those elements will be part of that regime, and that will be helping us quite a bit.
Okay, great. Jérôme, I wanted to ask you a question about, obviously, the ongoing softwood lumber dispute. Do you think a resolution is possible under the Trump administration, just given the strong views that the president seems to have taken on lumber?
Yep, thank you, Amir. And you said in your presentation that you didn't think that this year was going to be the year for negotiation. And I've been in the lumber business for 26 years. I'm a positive person by nature, and I think you need to be optimistic to me in our industry. And for that reason, we have a different opinion. The file is very complex. I've had the opportunity to work on it for the last 7 years. When the trade case started, there were two lines of thoughts. One was, let's try to negotiate a settlement, and the other one was, let's go through the NAFTA and CUSMA appeal process. And I think the second option is the one that Canada followed with no results. So we're very strong on the fact that we believe the trade case would be settled through a negotiation. What we'd like to see and what the history is telling us is in the past, in the previous 4 trade cases, both the president of the time and the prime minister got involved and made it a priority for their industry. And so we'll have a new prime minister here, elected prime minister, in a few weeks. We believe that it should be a top priority for our government to engage in a meaningful discussion with the United States. We know President Trump's style. He's been very aggressive, very active, but his track record shows that he likes to negotiate, and it might not be an easy negotiation. The outcome might be different versus how we're operating today. But we believe that there'll be a window here. There'll be a lot of trade negotiations happening over the next few months, and we truly believe that lumber should be part of those discussions.
Okay, great. Well, I'm sure a lot of public investors would probably also hope that your view proves right there. I wanted to turn to the broader housing market and demand conditions. And Luc, maybe if we start with you, what's your outlook for U.S. housing starts this year? And then how do you think of that mix between single family and multifamily starts, and how might that change that change in the housing market affect lumber demand?
I was really hoping you'd tell me. Well, I mean, it's really, I mean, we understand, I mean, and you did a good job in your presentation. We understand in the U.S., I mean, there's underbuilt. I mean, we understand it's not if, it's when. We've always been waiting for that when. Obviously, there's a lot of fog right now with the uncertainty that's going around the financial markets. Affordability is the key, and you said it well. I think really we need to get some improvement on that. Long-term rates needs to go down. But right now, I mean, with all the fear of inflation, it's kind of tough to do that. So we'll see if we can succeed to do that. But one thing that strikes me, though, that worries me a little bit is you had the new statistic as well, but NHB talked about affordability, and about 70% of the Americans cannot afford homes that are more than $400,000. So that's, I don't know the full landscape of the U.S., but it's a lot of people that cannot afford a home right now. So we really need to have some improvement on that side, on lower interest rate and some incentive to help people to be able to get homes. I mean, there's no question we're underbuilt in the U.S. Now, when we talk about the multifamily, those are used. We know that they use less wood, 1/3 about. I think depending on the regions, when you get to the Northeast and some of the places like that, there's probably going to be more, multifamily homes where there's land available. Well, I think the single family will be there, but I still think that the 70% of single family that you talked about, I think will remain in that range.
Okay, interesting. Ken, I wanted to ask you about the repair and renovation sector. Just given, we had some slides showing some of the big home improvement retailers a bit cautious on the year. What's your view on how that channel shapes up this year?
Well, my view on the lumber market is conditioned by the familiarity that we have with the supply side, more so than the demand side. And if you go through that list of sawmill complexes that closed in Canada in the second half of 2024, you would see that the supply-demand balance in SPF would have likely remained in balance even if there was a 2% contraction in SPF consumption in 2025. And the consensus view to date has been that it might be a slow start to the year of 2025, but then both R&R and single-family residential construction should pick up as we went through the closing 6 months of the year. And now there's just so much risk and uncertainty in overall economic conditions and consumer and builder confidence is that we might not have the second half rally that we would have expected to had if we had this conference 2 or 3 months ago. So that's how we see it shaping up.
Okay, can I add something?
Yes.
I mean, to me, is striking where you look at the housing stock age. You know, housing stock is going up. You know, people have a lot of equity in their homes. You know, so at least the interest rate, short-term interest rate, are going down, and you showed how many people are locked in their mortgage. So there's a lot of people that hate their homes, but they're in love with their mortgage. So I think, you know, see if the instability, there could be a little bit more stability economically. I think a lot of people will renovate or do some spending on that. I mean, I'm saying that I saw a lot of retailers were very, very bullish, and now they're a little more concerned because of what's going on. But I still think there's a good run going there.
And Tamir, I just wanted to piggyback on something that was said right at the outset in terms of the need for Canadian lumber in the U.S. If the U.S. makes a strategic decision to try and eat into that housing, that pent-up housing demand that hasn't been satisfied over the last number of years, if they tackle that, there will be an even greater need for Canadian lumber because their consumption will be rising faster than their southern yellow pine mills come on stream, and we all know that they take a long time to get ramped up after they're built.
Oh, that's good point, Ken. Jérôme, I wanted to ask you about the Canadian residential building market. You know, how do you see trends playing out here domestically, and any kind of notable differences across the country?
Yeah, we believe it will follow similar trends as what we see in the United States. And you had, in your presentation, you were forecasting I think it was a 3% growth in Canadian housing starts.
I think it was sort of 6-7%.
6%. And so I think the growth in population will support the additional need for more homes in Canada. The challenge is affordability, and for that reason, I think we'll see a further increase in demand for multi-housing over single homes. That's the trend we're also seeing in Atlantic Canada. Very strong demand for multi-housing. Single homes demand is flat, more or less year over year. Again, similar to what was said in the U.S., the equity in Canadian homes is very healthy. It increased significantly in the last 5 years. The inventory is not aging as much as what we see in the U.S., which again should favor multi-housing over single homes.
Great. Luc, I wanted to ask you about the EWP market. I believe Domtar's got two facilities in that market. Maybe you could speak to how that's performing, just given it's tied a lot to new residential construction and just given the builder incentives that's actually been holding.
Well, actually, it's performing very well. We're very happy about that business. I showed you the map earlier. You know, we have a lot of operation in Quebec, and we have those two plants that are in Saint-Prime and La Rouche in the Lac-Saint-Jean region. And we have several sawmills around it, and we can supply those sawmills and those two plants with very high quality wood like MSR and all that. So we have a lot of strategic supply that we can route there. We have two, I would say, very high performing facility in the place. So we're pretty good at producing the product. And also we have a very good partnership with Pacific Wood Tech. And actually, timing is everything. We announced this morning that we extended the partnership on a long-term basis that we have with them. And Pacific Wood Tech has been doing a very good job working with us on marketing the products, and they have our products fits very well in the suite of products that we have that give us like a very good line of products. They have the contact, the distribution network, and all those the technical expertise. So very happy about that business, and that's been through the cycle. We've been earning market share, and we're very happy about the performance.
Okay. That's good to hear. I wanted to, Jérôme, turn to international markets and some of the export opportunities, and Ken, thought maybe we'd start with you, given BC, you've got probably a bigger exposure to China and Japan, but maybe you could give us what's your outlook for lumber exports to Asia, and just also given the increased presence of Russian wood in some of those markets, how do you see that playing out, and then also any thoughts on lumber markets in Europe and in the Middle East?
Okay. First of all, we have a member of our board of directors that constantly reminds us that if there was peace in the Ukraine, that there would be an incredible lumber boom and construction boom, and we'd all be taking our money to the bank twice a day like we did during the COVID period for a while. But we, as a company, I'd like to think of British Columbia in general and our company in particular having a very long and rich relationship with the Japanese market, and that's certainly a market that I want us to prioritize going forward. We had some challenges in that market because in British Columbia for a considerable period of time we were in a salvage harvest program, and in our case 55% of the harvest for a number of years was in dead and dry pine stands, and our two and better performance got down into the low 60s, and today it's roared back into the high 80s, and so we now have more predictable supply for the Japanese market. That's one we're going to focus on. And you know, all I can tell you, Hamir, is that I've started to think a little bit about the European their competitiveness as a supply region now that I'm reading about sawlog prices approaching and exceeding 100 euros per cubic meter, which is materially higher than in BC, so there might be some new opportunities for us going forward. So we'll be exploring that in the next few months.
Similar question for Jérôme and Luc. In a potential, I mean, we got duties going up by the end of the year. Who knows if there's additional Section 232 tariffs? You know, would you expect to shift more of your lumber exports into alternative overseas markets? How are you thinking about that?
Well, if you look back 25, 30 years ago, there was a significant amount of volume shipped from the Northeast or the Eastern Canada to Ireland, to the UK, also to Northern Africa. With demand increasing in the United States, most of that production shifted to the US. I believe with the landscape changing here over the next few months, few years potentially, when you look at our fiber, when you look at the location of our mills, access to the ports, I think there'll be a portion of the volume that could be redirected to the European countries or maybe again Northern Africa. Freight rates are moving, but they've changed in our favor in the last year and a half. And then it will depend on currency, how the Canadian dollar does over the EU. That will probably drive a lot of the decisions in terms of how much volume will be exported to that region.
Okay, great. I echo what Jérôme just said. I mean, we're seriously looking into it. I mean, we have not been doing as much as we should or could, but I think this is something that definitely has our interest right now.
Okay, great. I wanted to turn to supply chain and some of the capacity constraints, and maybe Jérôme, starting with you. In light of some of the curtailments and supply reductions we've seen across the major regions, how do you see the future supply of lumber being impacted? Are those reductions permanent? Do you see some of those coming back in a stronger demand environment?
Yeah, I think when you look at permanent curtailments, meaning a mill is completely shut down, I think your question is, can you bring the capacity back in operation? It's very difficult. Our experience, when you commission a new mill, you have to hire new people, you have to train them, you have to build a skill set. And more importantly, you also have to build a logging capacity to support a new operation. So if a mill's been down for more than a year, with the current labor market, it's easy for people to find a job somewhere else. Therefore, the labor capacity to to open or reopen or restart an operation becomes very difficult from a sawmilling point of view, but also from a logging and trucking point of view. So I think once you close a sawmill for more than a year, the opportunity to bring it back to operation becomes very, very challenging.
That's if you have the fiber.
And I guess kind of related to that question for you, Luc, I mean, given your larger presence across Domtar in the south, and given the persistent labor, logging, transportation constraints in that region, perhaps not fiber, but these other constraints, how do you see supply growth playing out in the south?
You mean growing the industry?
Yeah, I mean lumber output.
I mean, I mean there's definitely some fiber available in the south. I mean, we've seen the wood basket growing faster than what people can harvest it. That's there's no question there. So, but you've seen a lot of the project have been kind of slowed down and put on the back burner. Obviously, it will depends. Those projects are getting more costly. The pricing has not been supporting in the last 18 to 24 months.
And how meaningful are those labor constraints? Is it getting better?
The labor, I mean, it's tough. I mean, I'm having those conversations right now. I mean, we have sawmills that are not operating full time right now and thinking about resuming some shift, finding the right people. I mean, the salary in the U.S. sawmills are not, they're like $16, $17 an hour. They're not very high for their standards. So people in that 4.2% unemployment rate in the U.S., some people might prefer to go work at McDonald's in the air conditioning than working in a dusty sawmill outside in the heat. So that's not that easy. So there's a couple of constraints that put some restrictions. The labor, and also even if you want to start a new sawmill or you want to restart, you need to have a home for your residual, which obviously everything is operating right now. So unless you create new demand for residual, that's another barrier that stops you for creating some new capacity there, or could make it more complicated.
And I know with some of the newer sawmill projects, and I think kind of West Fraser's maybe been ahead of some other players in the space by adding things like air conditioning and components of the sawmills in the south. Are you taking steps like that to improve just the working conditions?
No. I mean, that's not. It's tough to do in an old sawmill. I mean, obviously, and that's a trend you've seen. Some of the old sawmill get completely removed, and because you saw some south sawmill, I suspect some of those were just old one that got replaced by state-of-the-art sawmills and got replaced. But it's a little tough to do that with an old thing that's been built like 50 years ago or 60 years ago.
Fair enough.
Amir, let me ask you a question about sawmill upgrades and modernization. I think the market's valuing lumber stocks at around $200 per 1,000 board feet of annual lumber capacity, and so if we spent $800 a thousand to bring a brand new mill on stream, how is that accretive to the shareholders?
It's a fair question, Ken. It's been a while since we've seen any of those projects announced. So I think you're right. Investors, some of the southern projects have been slower to deliver, I think, the targeted returns.
I got to suspect that I haven't done a greenfield project, but I got to suspect the return on investment is not as expected because of the pricing depressed that's been in the last few years, for sure.
I wanted to, we just got in the last 5 minutes here, turn to some operational strategies, and I thought perhaps, Jérôme, could we start with you? I know Irving acquired a sawmill in Maine earlier this year. Could you tell us what attracted you to that business and how that integration is progressing? Yeah,
we purchased the Mesartas Mill in northeast Maine in January. The reason we were attracted in the transaction was the mill is very close to our timberlands in the state of Maine. We own and operate, we own 1.2 million acres of land right around where the mill is located. We also own and operate a rail line that connects our sawmills to our pulp and paper operations in southern New Brunswick, and also connects us with 2 Class 1 rail carriers in southern Maine. And that rail line runs right in the middle of the yard of that sawmill. The sawmill had also a great reputation in terms of being able to operate in tough markets. They have a good group of people, skilled employees, so we thought it was a great fit to add to our portfolio.
Great. Probably have time here just for one last question for both Ken and Luc. Maybe Ken, starting with you, just thinking about non-lumber revenue streams at the sawmills. You've obviously got a bioenergy project. Maybe you could speak to the revenue potential to either grow that or the backdrop for that for the broader BC industry. And then, similarly, Luc, maybe you could also speak to some of the non-lumber revenue opportunities that you see.
Okay, well, thanks, Amir. Yes, we have roughly $26 million a year of hydro revenue and a 50% EBITDA margin, more or less. And it was a 20-year contract, and there's 11 years to go in the contract. And so if we had this conversation 2 years ago, I would have had to admit that the terminal value of our power plant when the 20-year contract lapsed would be pretty nominal, because what BC Hydro was doing was really ratcheting down the power price that you got as your contracts were renewed. And now we have just brought on stream a $16 billion dam, which has power costs of over $100 Canadian per megawatt. And we brought another 8% on stream through a variety of First Nations joint ventures in the wind mainly and a bit of solar. And those prices are $75 plus per megawatt. And so we think that once our contract with BC Hydro expires, that we will be able to renew it at a rate that makes good sense for us and for BC Hydro. But simply put, we think the post-initial power contract cash flow has been enhanced as a result of developments in BC over the last 2 years.
Yeah, I'll take a different angle on the biofuel. If you think about all the byproducts, biofuels, and all that, this is a trend that I've been watching very carefully, because, obviously there's there's a lot of green interest and all that, but to be able to do biofuel and all those bioproducts and those things, you need a lot of material. And a lot, if you exploit a forest in Quebec and Ontario and you harvest there, some of the material you have to go get very far away. And that's really the economics of it that's been very difficult to make work, because you need to get, there's a lot of material. People come with those projects and say, well, I'm going to make this, but they need to get the product that's like 300 or 400 kilometers away, because there's branches, there's all those things. And now the economics, to me, doesn't quite work yet, because you cannot bring that material. And what's been happening is a lot of people have been promoting project, but then after that they turn around and they say, well, that doesn't work, and then they come and compete with the same product we're using in the sawmills and the power plant and the power generation plant. We have a power generation plant now in Sanitaire that's shut down because we don't have enough material, because we're all fighting for the same material. So some of those projects make sense, but we have to be careful, because we don't want to accelerate the decline of some of our industries like the paper or other things, because now we're getting too excited about this. And I think those projects as well, with what's going on now with the US and some of the drill baby drill and some of the, I think some of the economics or some of the incentive on the green is going to change. So, we're watching it, but I think we don't want to support something that's going to be to the detriment of the industry that's already well established.
Okay. Fair enough. Well, at this stage, I'd like to invite Karina to come back on stage for some closing remarks.
And it starts with a round of applause for our special guests, the industry leaders. Thank you so much. So again, Luc Thériault, Ken Shields, Jérôme Pelletier, and Amir Patel for the presentation. I'll be short because we want to offer you the gift, the maple syrup gift. But because we're all together, may I say thank you again to USNR for being our sponsor for the second half of the market seminar. Again, thank you to Western Forest and all other sponsors. And in a couple of minutes, we'll meet upstairs for lunch, and I'll make sure to name them all because they're numerous and so important to the success of this event. The lunch will be held in the Place du Canada room, the same room if you are used to this convention. Make sure to be there. Do you know who's on the podium, who's going to be our speaker at lunch? I have this question for Ken. Ken, did you participate to Vancouver Olympic Games in 2010? Yes, you did.
I attended.
You attended. I know. You attended. You didn't participate. Okay, it's good. When you learn English, you get to pick the right verb. I will remember this one. John Montgomery. You know John Montgomery is going to be there. He won a gold medal at that Olympic Games. All right, everyone. Thank you so much again for being here to attend this market seminar. I'll see you in a few minutes upstairs. Thank you.
Perfect.